The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 27th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs. Hope everyone out there had a fantastic extended Memorial Day weekend out there. Great to be back with you. Let's check out our empowering belief, what I like to call the three forces of life. And you know these, the three forces of life: their knowledge, their time, and its effort. Force number one is knowledge. And, you know, today most of us, we're going to have 3 meals and a few snacks. Some of us a bit more, maybe a little bit less, but we're going to feed our body. And the real question is, will we feed our mind? You see, each day we should be setting aside, say, $10, $15 a day for an education fund for our mind, for things like books, workshops, newsletters. Reason being is that you and I get a constant flow of ideas, and sometimes those ideas, they become an inspiration. So the best money spent is money spent to cultivate the genius of our own mind. Yes, folks, feed your mind, for the money spent is a small price for the promise of your unlimited potential out there. Force number two is what we call time. You see, time is simply irreplaceable. And gaining knowledge, well, it takes time. So there's always two ways. There's really only two ways to acquire knowledge. You can do it by trial and error, or we can hire a coach, someone who can teach us shortcuts, one that can compress decades into days. Each will get us to where we're going, but one will get us there faster, and in the end, it'll cost us much less. That's a lesson that I had to learn the hard way. Most folks learn that the hard way out there, but eventually it catches up to you. Force number three, it's called effort. Now, there's a huge difference between what I call casual learning and serious learning. And effort is the investment that's going to end up opening up those floodgates. You know, what you want to do is you want to immerse yourself. Remember, it is so important to put forth the right effort out there, and proximity is key. Just think about that. If you do put forth the effort, folks, light bulbs will go off. What do I mean proximity is key? If you really want something, really move towards it. Get as close as you can to it, folks. That is how you just simply transfer knowledge out there. So look, remember, always spend the money, the time, and the effort to achieve your outcomes. These are the investments that'll turn on your lights, start turning your wishes of wealth into reality. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading up 62 points. She's trading out at 16,668. S&P up 8 points, trading out 1908. Composite up 31 points, trading out at 4217. Leading the market to the upside. It's been leading here for several days out here. It has left the station, and that is percentage-wise. It's the Russell 2000 up nearly 1 full percentage point right now. It's up $10.75, trading out 11.36 out there. Apple's up $6.70 or so, trading out about 6.21. Priceline up $35 right now. Intercept to Pharmaceuticals up $11. Hillshire Brands on a buyout up 21%, trading up $8. Regeneron Pharmaceuticals up 6. Apple up 6. Alexion Pharmaceuticals, that IBB must be on fire now. That's participating in this nice move. Summer rally is what we're looking at here in the markets out here. Do not step in front of this freight train, folks. This market wants to move higher. There are going to be pullbacks. Well, I think there's going to be a pullback here. There ought to be a pullback, but this freight train may just simply keep on motoring on. But my suggestion is don't be looking at this thing from the short side out here. To the downside, though, you got the VIP Shop Holdings is off $3 and change. Valiant Pharmaceuticals, VRX is the ticker symbol. That's trading off about $3.30 out here. No, I'm sorry. Yeah, 360 down about 2%. Durata Therapeutics, DRTX, off 14% down, 247 as we speak. Our call number is 877-927-6648. Let's take a look at the Russell 2000 out here. So we're going to start look at, if you're listening to us on the radio or your mobile device at TFNN.mobi. Let me tell you what we're looking at here. On the Russell 2000, I'm using this as my first touch point to identify a channel line. I'm using the open from the session of March 21st out here. That is a price point of 1203.16. That happens to touch the open of the session on April 2nd out there, and that's at a price level of 1190.79. Also happens to touch the open of the session on April 4th. That opened at 1187. Sets up a pretty nice resistance line. Well, what has the Russell 2000 done here? You know, after it made its hammer candle back on May 15th, as it made its low out there, today it's up and above that resistance level of that price channel out here. And I don't have the bottom side drawn in, more focused on the top side. You've also got the Russell 2000 today getting above what looks like the 50-day exponential moving average out. Let me make sure here. Let me make sure I got which one is my red one out here. Let me where's my, just to make sure. 50-day. So it's up above the 50-day exponential moving average, which is, by the way, priced out at 1131.80, and you're trading at 1137.26. So where's the Russell headed to? Well, if we come to the swing point high, which actually took place on March the 4th, notice I'm not using that number at all. We go from March the 4th down to the low here on May 15th out there. You also see we're up above the 0.382 retracement. So looks like the Russell on its way to 1163, another 30 points higher out there. You got to love it. Russell 2000 and the NASDAQ here. This is how rallies really work here. When the two of them are leading the charge, which they are percentage-wise, price-wise, the whole kit and caboodle, you can expect a real nice summertime rally. Let's take a look at ABX with our man Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How are you doing today?
Yeah, we passed the 618 on, it was at like 1648, so where's it going to go now?
Well, if we take a look at Barrick Gold, ABX is the ticker symbol. Let me refresh my chart out here. I showed trading out at $16.02. So this thing now is headed at least towards its, are you long this? You're looking to get in? Tell me what you're doing, Victor.
I've been looking at it, but I think it's going to go to the low of 15 and maybe even break that. I don't know.
Yeah, well, so let's take a look at A to B equals CD down patterns. Let's see what it's done here. So the 8-point on this, we'll look at a number of different factors for you. February 25th, the high at 2145. The B point I've got here is at March 27th, low out at 1772. And the B point is April 9th out at 1922. 1-to-1 says 1549. I think, was that a number that you were in the 15s? Is that what you were looking at?
Yeah, it's the .618 retracement, which it went past, so I guess it goes to the next level.
Yeah, .786. We'll take a look at those. So it says 1547, which makes sense. That's its swing points back in December. If it breaks through that, what Barrick Gold has is a nice little island reversal pattern down here, Victor, that maybe it's trying to go rescue those passengers. And that island bottom formed over the course of July 5th, July 8th, July 9th, and July 10th out there. It formed that little island. It's a nice reversal pattern out there, and it looks like maybe that is where it is headed to. You're saying .618. Were you using the low of that island reversal from July 5th, do you know? If I use that, the .618 retracement is at 1649 level. So that 1515.
That's a Larry Pesavento. I listen to him.
Okay. Yeah. Okay. Good. Okay. So 1515-ish is the range. Now, let me switch over here and see what gold is doing. So what you really want to watch is I'm going to switch. So does that help you out, at least with regard to Barrick, as far as where, Mike? Because what I really think how you want to take a look at Barrick or any of the real mining equities, and today's an important session for gold out here because, again, we have maybe a fourth or fifth time here where gold is trying to break through its area, its B point. And the B point is, what's that?
No, gold expirations are today, like tomorrow morning. So does that have something to do with the volatility?
Could be. Gold has somebody's had their finger on gold, their thumb on gold, all their weight on gold, because it's had such unusual action of small price movement for an extended period of time, and really that's unusual. It's very unusual.
We're going to a
But
wedge shape. Where do you think we're recoiling?
I can't.
Higher or lower?
I'm sorry?
Where do you think it's going to coil? Higher or lower? Like where do you think we're going? Higher or lower?
I think if 1277.40 fails today, because it has held 3, 4, 5 times here since April the 1st out there, if it gets below that, I think you're looking at 1184. And probably you're looking at 1184 sooner than, in a quick period of time. So whereas where it had really traveled sideways with a narrow-bodied candle formation out here, I think 1216, by the way, is the 1 to 1A to B equals CD. But that coil formation, use the word coil, because it has been building cause, I think if it really does fail here, it gets all the way back probably to the June 28th lows out there, which is right around the 1179-ish.
Wouldn't you say it's like a wedge shape we're in right now? We're going like in a wedge?
Well, if I were to draw that wedge, it looks to me like if you were going to use a wedge shape, it looks like to me it really broke through that wedge shape today.
Oh, it went down. Yeah. And what kind of candle is that? That's like is that a hammer candle, or is that like that low red bottom?
No. The
what
low
kind of
on
candlestick do we have today? No, I mean on gold. What kind of candlestick on that?
On gold? No candlestick.
No candlestick?
No candlestick out here, because it just simply had been moving sideways out here. There was no real direction. So you're not going to get today's candle. Yeah, today's candle is just simply a candle session that's breaking lows. And there's volume behind the move. 145,000 contracts are taking out 133,000. So it really does suggest that if you're looking at ABX, I would wait for gold to give you a reversal signal. And you see it close below 1277. It probably says don't touch gold until you see 1184 to 1216.
There's a new one out there, OUNZ. Based on an ounce of gold it started trading, OUNZ at 12. You should check that one out, see if it's any good.
OUNZ. Okay. Yeah, I see it's
$12 a share.
Pretty new, and not much in the way of liquidity out there.
Would you touch that one or not? Would you touch that?
I would just, if you're going to trade gold, I'd go to GLD, or there's another one out there that's priced that's I forget, there's like 0.1% of gold or silver.
So
and it's
for ABX,
got a lot of volume.
Don't touch it yet, you're saying?
Do not. Yeah, what's going to happen with regard to each of these mining equities is they're going to their direction is influenced by the price of by the direction of gold. What I would do, Victor, if you're looking at gold or silver equities, I'd go watch the ones and see which ones are acting the strongest. As if in fact gold breaks that low today. If it doesn't, it's just another sign that the bulls are out here really defending the 1277 level. I can't tell you what it's going to do. I just know if it does break that area, then it's starting to break the back of the bulls out there. I hope that helps you out.
Thank you, sir. Bye.
You bet. That was Victor in Paramus, New Jersey. We began by taking a look at ABX. After this breakout here, we're going to go to Kevin in Tampa, and we're going to take a look at ticker symbol PETM. I believe that's PetSmart out there. And right now the Dow is up 73, S&P is up 10, Composite up 36 points, Russell 2000, it is on fire. It's up $13 right now, up 1 1/10% out there. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box.
This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the U.S. dollar index off really 3 pennies here, so it's not a lot of movement inside of the currency market here. We haven't really touched on the currencies all morning long, but hard currency-wise, you do have a ton of movement. We were talking with Victor in Paramus, New Jersey. We were taking a look at ABX. We were taking a look at gold. That's off $19 right now. Trading out at $12.72. It's got some volume behind its move here. Silver's down 31 cents, off 1 6/10%. It's trading out at $19. Light sweet crude off 26 cents. Yeah, she's trading out at 104, 104.08. Let's go down the street to Tampa to our man Kevin. Kevin, thanks for calling. Thanks for holding. How you doing today?
I like the show.
Thank you.
PetSmart very much. It's way down.
It is. Are you trying to buy this, or what do you tell me what you're doing here?
Well, I was lucky enough to get in back in February at a lower price, and now I'd like to, I think, go in even a larger way.
Really?
You know, there's a lot of little, I don't know if you have pets, but, I mean, there's some niche stores that sell stuff and all that, but, I mean, the competition is really not there. I mean,
Kevin, what happened? What happened on the trading session of May 21st? Do you know? What was that? An earnings date out here?
Yeah, and they did. It was one of those things where they did well, but not as well as they thought. You know. And
yeah, well, I can tell you that to me, by trade and by background, I'm a cut, paste, and assemble guy, a CPA. So fundamentally, I can walk myself around any kind of balance sheet or management discussion analysis inside a 10K out there, and I can really cut through the chase. What I learned the hard way was by having stocks fall out of bed, and couldn't understand it because all the technicals were really great. And I mean, I was like, that's how I ended up finding Tom O'Brien and deciding that what I learned was that the most fundamental aspect of any equity was what the shareholders were doing. And that's where I really turned to technical analysis to understand. And I realized that was, for me, because it was about making money in the market, that's really where no matter what it was that the CEO was selling or the CFO putting into the management disclosure analysis portion, no matter what it was they put in there, it's really what are these guys on this screen here telling us? And what I would tell you, Kevin, is that the folks on the screen here, they're saying that this stock has lower to go. This thing, when it came out, what it did was it passed a B point of an A to B equals C to the downside in the absolute worst possible way that you would want it to if you were long the stock. And that was on that May 21st date when it did 13 million shares to the downside out there. Because it not only did it pass a B point with volume, but in essence it almost made the 1-to-1 A to B equals C to the downside out here. So I hope you've got a bunch of friends out there because it looks more like 51, 30, 4607. What I can tell you is the institutions at this stage are just in a big dumping ground when it comes to PetSmart out there. So, even on the long-term aspect, when I take a look at Amazon and its decline out there, I showed this in the first segment, and PetSmart has a similar looking trend line. And unfortunately, what it did last week was it busted through it in the worst way possible. So, on a weekly chart, this is saying $52. Its next base really isn't down until about the 46-ish area, and if it does that, it's probably $37. Now, it doesn't mean that it does it overnight or what have you. It doesn't mean that there aren't some bounces along the way out here. But with a market that is seeing a real nice summer rally out here, PetSmart is going the wrong way. I don't fundamentally. To me, and it also came into a breakout area, which took place back here on May the 23rd, right, which had 7 million shares of the upside. It just seems like institutions are getting out of Dodge out here. So I could be wrong, but that's what the stock charts are telling me right now.
So many of these things that you read, different stock analysis type things say it's got a $15 upside and so forth, but then it's like you said. I mean, a lot of people are selling into it, and if all those people really believed it, they'd be buying into it. But
yeah, I don't see it. I just don't see it. Hey, if this thing bounces, look, in a nice summer rally or what have you, this thing most certainly can bounce. But if PetSmart gets up to 59.75, probably at that stage it's get out of town. It's at 55, 51. So, yeah, the most fundamental thing that you can do, Kevin, I hope you've got some type of stop in place, is to use a stop. But I would not be a buyer of PetSmart. There's too many other things. Go buy the Russell 2000. You'll make more money than you will buying PetSmart. You bet. Thanks so much for calling. We got the Dow up 77. S&P is up $11. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We got the New York Stock Exchange. She's up 49 points right now. Net advancing issues 1340. So you got advancers leading decliners here 2-1. So nice market breadth. The bulls effectively took control of the New York Stock Exchange. They did that on Friday. Now we're taking a look at the NYSE right now. The NYSE, New York Stock Exchange, along with the SPY, along with the Dow Diamonds, so we're going to take a look at the Dow Diamonds shortly as well. They each formed a nice little, very significant, very significant bearish reversal pattern, referred to as the island top reversal. When Victor and I were taking a look at ABX, it was an island bottom reversal, and you can see that really acted. ABX made a nice bounce off of that island bottom. Now, when you take a look at the New York Stock Exchange, number one, the passengers on that island, in essence, they were rescued on May 22nd, on Thursday and Friday last week. Well, what we're seeing here today is we're seeing the highs get taken out. That was the May 13th high, 10,725. You're 10,730 right now. Well, guess what, folks? There is nothing more bullish than a failed bearish pattern. Yes, there is absolutely nothing more bullish than a failed bearish pattern. And in this case here, we're not talking about a small bearish pattern. We're talking about as bearish as you possibly can get. That's how strong these markets are that we're in right now. So you've got the VIX index right now trading well below the 50-day exponential moving average. Yeah, it had a little bit of a bounce this morning. It's up like 29 cents or so. No big deal out here. The key inside the VIX index is going to be the 50-day exponential moving average, now down to a level of $13.45. You're trading at 11.65. That's a huge move out there inside of the VIX. As long as it trades below the 50-day exponential moving average, the market does one of two things: either trades sideways or it moves higher out there. So that's what you've got going on inside of the VIX. If we go take a look at the other liquidity gauge out here, that liquidity gauge being the Euro-Japanese yen. Well, the Euro-Japanese yen, this thing came into a very extreme oversold condition back here in the trading session of May 21st. So it's just been bouncing along now. It's a directional forecast out here, and from a directional aspect, it's got a little bit higher to go, at least on its first move, which is just coming off of the highs from May 8th down to the low that was put in on May 21st out there. The 0.382 retracement level is about 139.74. It's moving north, albeit small, just in small little increments out here. As I said, the paper currency markets are not moving much. The hard currency market, that's a whole different story out here. Gold's off $24 right now. Silver's off 37 cents. But with regard to back to the market, there is nothing more bullish than a failed bearish pattern. And that's what you've got inside of the SPY. That pattern failed several days ago. Let's go take a look at the DIA. Let's take a look at the diamonds out here. We'll take a look at that ETF structure. That island top right now, you can see, let me just do this, let me do that, because we're going to get rid of it because it no longer really is an island top, but I just have that in there probably for one more day. Let's just clean that up here. So there's your island top here. Now what the diamonds are clearly into, they're already inside that bar from May 14th out there. So that island in essence is void, null and void out there. The diamonds are not at the swing point high. They haven't taken out their May 13th high out there, but the New York Stock Exchange has taken out its May 13th high. So now you've got a new all-time high inside of the NYSE. And the NYSE, that's the amazing thing is it's broken out of a 6,000-point consolidation. That's what the NYSE does. So it says that the liquidity, maybe we have, the question is, have we seen the liquidity that the Fed has pumped into the economy? Have we seen it really come through with regard to the stock market? Some may say yes, some may say no. If we just take a look at the stock chart and we forget about every other thing, we only traded the stock pattern out here. I'm just looking for it. What the New York Stock Exchange has done, here's the NYSE right here. This thing has been trading in a consolidation pattern ever since April of 2003 out here. So from those lows up to the highs out here back in October of 2007, they've effectively been taken out. Of course, price moved down into March 2009, went ahead and made a 100% move by getting back to the February 28th level out here. That is a 6,000-point consolidation. The NYSE as an index was the last to break its consolidation level. It says that at some point in time, the NYSE wants to travel up to about the 16,200, 16,300, somewhere in that area mark. Right now it's trading out at 10,727 out there. So long term, pretty bullish pattern inside of the New York Stock Exchange out here. Let's go and take a look at. We took a look at. Well, I don't know. We took a look at gold. We took a look at gold. We didn't look at silver and light sweet crude. Let's do both of those. I'm going to switch back here. Let me get back a little bit further in my charts, and then we'll take a look at the indexes, see what's going on there. But the biggest move here, well, I can't say the biggest move, but one of the moves this morning going on is inside gold and silver. Let's go take a look at high-ho silver. Let's go see what it's done. So it's trading into its little potential Gartley buy pattern that it's trying to form out here, about a 0.786 Gartley buy pattern. That 0.786 Gartley buy pattern would come in at the price level about $18.96. You're at 19.07. So silver needs to hold 18.96. Now, not only does silver need to hold 18.96, if it gets down there and it is able to hold that level, then you've got to go back to gold, because I don't think that silver necessarily is going to bounce higher with gold moving lower. You got volume inside of Goldilocks, 175,000 contracts as we speak right now, taking out a swing point that only has 133,000 contracts. It's now, as long as it closes below the 1277 mark. It is going, and it is confirming an A to B equals CD to the downside out here. Now, in the case of light sweet crude, today, let's see, do you have a key reversal session? Let's see, the high from the 23rd, I show 104.50. We're taking a look at the July contract, 104.50, and today's high, 104.50. So, yeah, you might have a little bit of, it looks to me more like, though, even though this could be a key reversal session, nice pattern set up in the 106 area inside of light sweet crude. Again, it is the July contract that we are taking a look at. A nice 1.618 expansion of two sets of swing points out there in that 106.21-ish type of level. It looks to me like that is where light sweet crude wants to travel to. We haven't looked at any currencies. Let's go ahead and do that. Just get a feel for what's going on inside the currency market. Now, the U.S. dollar index, what's interesting, it has now taken out a little bit of a trend line. That trend line was off of the January 2014 high, 81.53. Next portion of the trend line that I would use would be the high of April the 4th out there. You can see that on Friday, the U.S. dollar index broke above that trend line. Today, it is trading above that as well. Looks like it's at least headed back to its most recent swing point that began the trend line from January 21st in the 81.14, the 81.53-ish type level out here. If we take a look at the euro, what the euro has managed to do is come back and test its descending price channel line. It hasn't gotten back inside there, but that would be the next move of a totally failed pattern inside of the euro. Now, on the daily chart, she is in the oversold territory out here, so could bounce. It needs to hold that channel line out here, but we'll see how this all plays out. Other currencies out here, other currency pairs, the Great British Pound. We take a look at that. This thing now may be setting up the A to B of a CD to the downside out here. That would be your A point on May 6th high out at 1.6996. Your B point is the .786 retracement off of a move out here, and that's a low of 1.6730. And then the C point on this would be the high of May 21st out of 1.6920. 1-to-1, A to B equals CD to the downside takes you all the way back to the swing point from April 15th out there, and looks like maybe that is where the Great British Pound is headed to. We want to watch the Great British Pound on a daily buy opportunity out here, because on the weekly chart it's broken through its consolidation level, so this offers promise of a much higher price out here. If we take a look at the likelihood of where that pattern would set up, I would come off the swing point low from March 24th, come all the way up to the high that was in on May the 6th out here, and a 0.618 Gartley buy pattern is right back at that swing point. One other Fibonacci number, then I'll actually draw that pattern in. I just want to see where the so you're looking at about 1.667 to 1.661 out there. And I can't tell you which one, or if either of those, but the Gartley buy pattern that would be setting up here. Here is your 0.618 Gartley buy right around here. Let me get rid of this so I can get rid of some of the lines out here. That's the first one that you would be looking for, and that is the Great British Pound, which is a move down into the 1.6677 area. If that level fails, then you're looking at likely a move to probably about the 1.6613-ish area for your Gartley pattern. So that's what's going on. And you'll see if we take a look at the weekly chart here for the Great British Pound, this thing has nicely broken through its consolidation area. So no wonder that it hit some resistance as it was getting really towards its most recent, since it's 2009. The 2009 high out here, August 7, 2009 high in the 170 range out there. You did get a little bit of a reversal signal as it made that move on the weekly chart. You did get a little shooting star candle the week of May the 9th out here. But really, if you take a look at the weekly chart, price behavior here is not that bad when you take a look at the Great British Pound. Let's take a look at bonds. Let's go see what bonds are doing as we speak. So bonds here had completed. They formed a Gartley buy pattern. This was back in March 7th. They formed a nice 0.618 Gartley buy pattern. That Gartley buy pattern turned out to achieve the fifth outcome. There's 5 outcomes of any Gartley pattern. The fifth and final outcome is at the C point But it forms a new C point of an A to B equals CD. In this case, it was an A to B equals C to the upside. Now, price projection was 137.31. Bonds made that move on May 15th. They actually got up to 138.04, closed back at 137.19. Now we're seeing a bit of a pullback, not a ton, but watch the trend line. It's going to be important to watch the trend line out here. That's a short-term trend line that we're looking at. That's coming off of the April 4th area, 131.21 as my next touch points. You can use either the low of April 29th or the low of April 30th. We'll see if bonds are able to, and if they break that trend line, they should go down to the next trend line, which is the one off of the December 31st low, right around the 127.23 area, and that next trend line being March the 7th. That's out at 130.20 out there, and that's what's going on inside the 30-year Treasury. So not a ton of movement here today as we speak. Now, let's go back and let's take a look at some of the indexes. Let's go see what they're doing out here. I showed the Russell 2000. You can see this is strong, very strong like bull. So what had been weak inside the market has now turned out to be the leader percentage-wise in the clubhouse to the upside out here. So you've got the Russell 2000, you've got the NASDAQ moving higher. Big summertime rally is brewing inside the markets. Why? So many different factors. Taking out the most bearish of bearish patterns. You can't get any more bullish than that, in my opinion. If we take a look at the other indexes, let's go see what the S&P 500 is doing. The S&P 500 right now trading out at 1910. Let's take a look at a number of different A to B equals CD patterns that she has in place out here. The larger one comes off of the February 5th low. That low at 1737.92. The B point on this is going to be the high from April the 4th out at 1897.28. The retracement down into the April 11th low at 1815.80. 1-to-1. A to B equals CD. 1973. That was a good year. I don't remember why it was a good year, but I know it had to be a good year out there. Every year is a good year. 1973 is where the S&P 500 wants to make a run up to. And what backs up that 1973 claim? Well, if we go back and we take a look at the actual index futures out here, what we will see is that the ES Mini had been traveling in a consolidation of 112 points. That's a consolidation that began back in October 2013, a sideways consolidation. She has effectively gotten out of that, and its price projection is 1957. So you got a consolidation break inside the futures complex out there. That says that higher price. Doesn't mean it all happens overnight and that things don't eventually pull back out here. They should pull back, but anything can certainly happen. So that's what the S&P 500 wants to do. Let's go take a look at some of the other indexes. Let's take a look at the IBB. I did mention here as we took a look at what was moving in the markets here dollar-wise, it was a lot of the pharmaceutical companies. In fact, one of the things that I can do here, we'll do that. I'll do that first. Let me put up the Rhodes Momentum Indicator. Now this is I want to put up this other one here. So I've got my new supercomputer up here. Now this is the Rhodes Momentum Indicator. I'm going to go ahead and I'm going to put in all of the stocks, or most of the stocks. I haven't really checked this here over the last couple of months, but everything inside the IBB. Now what this is going to do while we're taking a look at the other, I've got it in very large print out here so that way you can see it. Remember, you can always catch the archive of this show on Channel 10. If you're listening on your mobile device, remember you can always get this live stream to that mobile device just simply by going to the homepage at TFNN.com. Upper right-hand corner, you will see a little button, 3 little smartphones. Click on that. When we get back from this break, this is going to show us, which stocks are the most bullish inside of the IBB right now. And then we're going to go take a look at it as well. Dow's up 78 points, S&P up 11. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 75. S&P is up 10. So before we went to break, I was punching up my little market analyzer. What it allows me to do in the click of a finger or two, it allows me to take a look at what's going on inside each ETF, an individual stock, and just really try to understand the trend out there. Now, the strongest trends are going to have the monthly, the weekly, the daily, all pointing in a bullish mode out here. Now, the IBB has got, I don't know the number of issues, some 175 issues or so, somewhere right around that range. I apologize for not knowing the exact number off the top of my head. If I take a look at the most bullish of stocks out here, from a trend standpoint, that's really what I'm interested in, is how things are trending right now. You can see you've got probably about 20 or so that are night. This is monthly, weekly, daily from a trend standpoint. So I just simply get rid of everything that, and that's where what's nice is that when you're trying to, if you're looking for individual stocks with inside a sector's taking up, one of the things you want to do is you want to try to take a look at, buying the strongest of the equities, or if you're looking to buy one, you want some kind of a sign of strength. So that's another way to be able to take a look at it. Now, if I do take a look at, if I take off the entire row filter, so I'm not looking at weekly and monthly here, on the right-hand side, we're just taking a look at those that are now daily and bullish. So this first page has got about 25 stocks on it. Halo is the, is the last one on this page. So if I move this up here, let me see if I can, where did Halo go to? I know what I should do. Let me go all the way to the top. Gurn is the one. So let me see if I can move that up. So you can see 25 or so. If I get to Gurn right about there, there's another 25, so that's 50. OREX is another one. So on the daily basis, what's going on the daily basis out here? There's another 25, so now you're up to about 75. That's VSTM out there. So about 75 of the 175 or so from a daily standpoint. I think it's 175. No, can't be 175 because that's 75. If you take a look at the bearish, there's 100. So it's probably more like about 120 or so. So you've got, from a daily standpoint, the trend has changed with inside the IBB with regard to individual stocks. Now, on the weekly, there's been some damage. There's no question. If we take a look at the IBB, you can see the damage that's been out here. Now, what from a bullish standpoint, the IBB, what it's done, it's broken its downtrend line. That's a downtrend line off of the February 25th high out there. That's at a price point of 275.40. So a clear break of that trend here today. Volume-wise, so far today, 443,000 shares. In essence, it's dealing with a B point of a potential A to B equals C to the upside. That took place on April 23rd. That's a 235.76 high, 2.4 million shares. So it should be light volume Tuesday anyways. The first hour and a half of trading, 443, taking on 2.4 million shares. Yeah, I don't think it's going to have the volume today. That doesn't mean that it won't float higher, that it won't sting like a butterfly. And is that how it goes? Sting like a butterfly and... No, sting like a bee, float like a butterfly, and sting like a bee. And that's exactly what the IBB is doing out here. Looks like it wants to get up to the price range of about 248.59. If I real quickly out here, let's go see if I can put in the TAS signal box marker out here for the IBB. See on the daily chart if it is above a unfair high level. Let's see how quickly this system will do it. I got about 15 seconds. Yeah, on the week daily chart here, it is in full bullish mode. So in essence, it says the weekly chart ought to find resistance. 264. That's going almost all the way back. It is going all the way back up to its swing point highs out here. So on the daily basis, it's in bullish mode. Of course, we know that it broke a trend out there. Folks, our time is over for the day, but stay tuned. Not to fret. Our man Basil Chapman will be up next. Thanks so much for joining us. Have a great Tuesday. Look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.